Okay. Well, thank you, Scott. So, during yesterday's event, hi, Brock. I interrupted. I think Steve was doing some analysis, and I wanted to alert people that we were breaking down in gold. And I don't know how deep this is going to be. In fact, one thing that could happen by the end of the day is a 2 week reversal signal. You just count back a couple of candles at 1681. Yeah. So potential 2 week reversal in gold. Reporters will, any reporter could give you a reason why something is doing something. So, how about that the dollar has peaked? So, the dollar trader FX is hanging on by a thread. Okay. And if the dollar does not turn and takes out this low, which has confluence with these two MAs, look out, this low will give out. Okay. And we'll get another low. So we had a lot of dollar bears here over the past couple days. I'll tell you what, the yen is really tough to trade because I thought that was an important level. And you sold the breakdown, you thought you had it, it tested, it came up. Then was it a false breakdown? No. And then here we are breaking down again. So I'm going to take the Steve Volge approach on yen right now. And that means, why trade it? So definitely weakness. Any preferred long or short of the Dixie? Yeah, a great segue question because this is starting to work, Scott. This EG, which I took heat on most of the week, scaled into it. Worst long was at 50, then I added at 18, and yesterday added at 80, and it looks like we've come out of this downtrend here. Um, we've recaptured the 61.8. It looks pretty good to me. So when EG looks constructive, your preferred long would be euro over cable. So this might just be beginning. I think there's a chance for us to trade above this high, head up towards the 89.5, 90 level. And if I wanted to get real big picture, what kind of high do we have here in EG? And I'm not saying you can't have important highs when it's confirmed, but it would be unusual. And even if this maintains being the high, you have quite a nice move. A 50% correction back to 90 would be a nice trade. So that's really about all I want to say. Is I want to thank all my teammates for putting together one of the best events I've ever been a part of. Okay, and you guys know FX Street always puts on big events and all day, one idea, theme type webinars. But I'm telling you, the guest lineup that we had, I learned a lot, and kind of is shaping some of my, oh, shall I say it? I have biases in the market and narratives that I'll be looking for, and it definitely has. Besides what I'm seeing in the charts, tempered my dollar bullishness at this point. So, very possible what's happening in euro here may be embryonic when you look at it on a weekly. Some of the targets that Peter Goodburn had. Maybe this was it, and we pulled back and we put in a higher low. Right? Still has some proving to do. Right? Above here, above 110, back over 11.5 is going to project above this high. So We may be on the cusp of a change in trend. We'll see what happens, and want to thank everyone for their participation. There was a great offer yesterday. If you had it, I don't know if I could get the guys to extend it one more day on a Friday. Yeah, well, they've heard me, so it's up to them. And what a great job by Blake. Had a great presentation on both sides of the dollar argument, and does yesterday's action in the dollar give you a little bit more of which side of the coin you're going to come down on, at least for the next 10 minutes, Blake?
I well, hey,
You know,
look, I actually shorted the euro dollar. I shorted the euro dollar just about
a few
5 pips
minutes
ago.
ago.
So I'm
Okay.
I'm playing.
You express your
I'm,
opinions
I'm
in
expressing
the
my
market.
opinion on the dollar overnight. Now,
Okay.
and the thing about first of all, let me step back for a second and let me say what a great job you did, Coach. You did a fantastic job. I, I I know you really got a lot of these wonderful speakers to be involved in the Traders Summit. Joe wrangled them, like kind of had to babysit, if you will. I use the term babysitting in a loose sense and not in a demeaning sense either. But when you're trying to, I guess, wrangle, or maybe he's more like
Yeah.
a sheep herder.
He
Sheep
organized.
herders, but I don't want to be in a negative context. It's more of a, like, I mean, he's trying to herd a lot of different people, but you really brought them all in, and so great job, Steve. From a
Wow.
logistics standpoint, he really knocked it out of the park.
You
And
know what was cool, and I forgot to mention it to Steve, the backdrop that he had for all of us.
oh yeah,
You
it
know,
was
behind
pretty.
our screen, that was really nice.
It was yeah, it was cool. Did you see
Yeah,
all the people behind us? It was
yeah,
great.
they were we, they were turned away from us.
Yeah,
They were
no, it
facing the
was
other way.
really you guys did a great event, and hats off to you. I mean, I'm tired just because from the anticipation build up to doing a presentation in front of a lot of people, uh, but you were there the whole time, and you really did a great job. So hats
Thank you,
off to
Blake.
you, and hats
I,
off to
I had fun.
the rest of the team. So,
It was fun.
hey, as far as the market goes, uh, a couple things. You don't even have to be a Forex Analytics subscriber to kind of know what I was thinking last night. If you just look at the chart of the day, which is free, this is the Euro Aussie. I picked this up overnight, and I, based off this is the candle. Actually, let me
Yeah,
let me be able to zoom in
that was a
better.
great chart of the day.
Thank you.
They're all good.
A bullish engulfing candle,
What a call.
right?
Yeah,
And it was off the 200-day moving average, and so I picked it up overnight, put in a relatively tight stop, and I figured it was going to break above resistance. And
well,
this
this
morning,
the candle.
got out of it about 20 pips ago, so it's still moving, it's still squeezing, and I actually think it's got a lot further to go. You talked about you're seeing a little bit of a trend change. Yesterday was pretty
Yeah.
important for the equity markets because
Oh,
we
that too.
saw
Yeah.
this big reversal end of month, and everybody that listens to this daily webinar should have been very up to speed that we were going to get end of month selling in equities, because it was such a big gain in equities that the rebalancing was going to be equity or S&P negative. And I had read a lot of reports that we were going to get a dollar weakness and equity market strength. And actually, a couple things happen. Well, and I'll kind of walk you guys through all this here in a second. But anyway, we've seen this equity market reversal. What's going to be really key is where we close today, because if we close, um, let's just say we close where we're at right now, and I'm not going to sit here and say, oh, we're going to close higher or lower, because it's really critical. But we're going to have a false breakout this week if we close where we're at right now, and that's something that is pretty important to be aware of, because we had this, false breakout above the 618 retracement, and that's going to keep, I think, the downside pressure on the market. And I have to point out that just because we're seeing these cases of the virus subside, thank God, we're starting to see, summer take hold, and maybe, the impact of the virus is not so great, and it's subsiding a little bit. The fact of the matter is, and I know I made this point yesterday, is that life as we knew it is not going to be life as we know it moving forward, at least not for a while. So, how the economy comes back, and I say global economy, I should say, how we come back online is going to be, you know, um, probably a lot of fits and stalls and stops and starts, along the way. And I think that is going to ultimately lead us lower from where we're currently at in the S&P. And as I've explained to you guys on a couple of different occasions over the last few weeks, I think we're going to settle somewhere down here this summer. Where we go from there is going to be solely dependent on the progression or regression of the virus moving forward, and which I'm not a medical expert, and I'm not here to forecast that. But what I am thinking is, because of this false breakout and because it's May, seasonality wise, we're going to see a little bit of equity market selling, and it's probably going to take us back in 26, 2700 range, I would assume. And like I said, unless there's a breakthrough like instant virus, then that would put us above the 200-day moving average pretty quickly. But that's obviously very optimistic thinking on my part. So I got to explain this to you guys yesterday, just so you know exactly what was going through my mind as I was doing the presentation. Actually, let me stop here for a second. Let me go over to the chat screen. Does anybody here that's listening in? Does anybody know what I was trading through my presentation yesterday and the end of? And by the way, Steve, because he's so good at what he does, he scheduled me to be speaking at the London Fix at the end of the month, fixing flows as I'm trading for a firm with a lot of money. Thank you, Steve. Just want you to
It's
be
my job to keep challenging you, bro.
Thank you
Keeps
so
you on
much.
the edge.
So just so you know, as I was speaking, this was happening right here.
That's what
at that
partners
moment
are for.
The timing could not have been better, Steve. I have to really thank you for putting me on during that moment in time. Does anybody know what I was trading at that moment? So just I had my trading position. You guys take a guess what I was trading at that moment as I was speaking and presenting to all of you. Any ideas? I'm looking at your answers, and Chad got it. George got it. I was short the Aussie yen. So just so you guys know, I was short the Aussie yen right here as I was speaking to you guys. Now, I shorted the Aussie yen earlier in the session at 89.80. Was it early in the session? Whenever I put up, when did I put this on? Whenever I have to go back and look, I'm still short, but I guess it was on. Yeah, I guess no, it was 2 days ago. Okay, but I was short, and I'm just sitting there short, and I'm short from here, right at 69.80, and my stops were higher than where we got. But I was like, oh my God, this thing is breaking out right now as I'm speaking. It's like the end of month fixing flows. And I'm sitting here talking to you guys, and I'm like, holy cow, this thing's ripping up in my face. And And I stuck with it. And I'm still with it, but it was like the timing could not even be worse.
See, if I had let you have more time to ponder and think about it instead of having a presentation, you might
Yeah,
have got
maybe
out of it.
if I wasn't on the presentation, I might have said, "Off, screw it, I covered."
You see?
But you guys know. For those of you that don't know why I shorted it, you have to be a Forex Analytics subscriber, because then you have to go back and listen to all, or go back and read all the analysis here, about the closing the gap fill at 70, blah 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 blah, trying to break new trend highs, target to open the gap. And then once we got to the gap fill the gap, I was like, okay, I'm shorting it. So I shorted the gap fill basically. And oops, my office is a little loud right now. Hold on, let me turn that down. And so anyway, but it was so funny. I mean, I was literally talking to you guys, trying to focus on the presentation, and I was like trying not to focus on my position. It was just like I was up X, and then it just, within seconds, it just disappeared. And then as I was talking, I was flying into negative territory, and I'm just like, oh my God, I cannot believe this is happening right now. And so let's talk about the other acronyms that the Fed has. That's what I was thinking through the presentation. So anyway, I hope you guys all got a kick out of that. I had to just kind of tell you my story as it was happening after the fact. But yeah, I mean, I was also short some Aussie New Zealand, which is fine. I mean, I've been short this thing for a few days too, but but I was I have to state this because Dale had mentioned it just a moment ago about the euro pound, the euro sterling. I was just having a conversation with one of the guys in my office in Greenwich, and we were talking about the behavior of the euro pound, the euro sterling, which it has been more of a it's been more of a risk on risk off type of trade as of late, meaning when the market is sensing a little risk off, you tend to see sterling weakness over euro weakness, which keeps the euro pound, euro sterling pretty well bid. I'm not in it right now. I like the fact that we're back above the 200-day moving average, but I think if equity markets continue to slide a little bit here, we start to see equity market selling. The euro pound or euro sterling is probably going to firm up back towards 90 pence. I'm not looking for some big huge move out to 95 pence again. Frankly, I'm just kind of trading it more of a risk on risk off type of trade. But it was an observation that I've been thinking in my head. I'm like, whenever the market goes risk off, the pound just tends to be a little bit more weaker. And then it was one of the guys the guy in my office who is probably the best emerging market currency trader I've ever met. He trades predominantly the peso, the lira, and the rand. And he's an ex Lehman, ex Citi trader. He's my age. I think he's almost 50, and he's got a teenager graduating next year. And so him and I are about the same age. And we were discussing the euro sterling, and when he said that, I'm like, man, that confirms exactly what I've been thinking too. And like I said, I'm not trading it now. I'm not long the euro pound, but I think you trade it on both sides of the 200-day moving average. Well, actually, let me take that back. I'd rather trade it below the 200-day moving average, and as long as it's holding above this 87 pence, I'm going to be playing it on the long side. I think as long as I feel that as long as I sense that the equity markets are weak, that's going to be my go-to trade on dips. And this is kind of cutting out a lot of currencies that I'm really unsure of. As you guys know, my dollar view, even though I'm more of a dollar bull, and as you can see, I shorted the euro dollar today. and I want to stay short as long as it's, closes below 110. I'm not 100% confident in my view in the dollar because I've got a few different opposing views depending on the currency that I'm trading. The yen, even though I'm short the Aussie yen, and I feel the Aussie yen is a great proxy to equity markets, which that's the reason why I'm short. It still is, the yen is still a little bit of an outlier to me. So I'm trying to find other pairs to express my bearish or bullishness in the S&P, and right now it's the euro sterling, believe it or not. So anyway, it's just one of those things I wanted to bring to your attention that I'm thinking, and like I said, it was confirmed by one of the guys in my office, just kind of confirmed the way I was thinking about it. Another pair that I think we need to be aware of is the US dollar Mexican peso. And this one I traded poorly, just so you guys know. I explained this yesterday, but I'll explain it again. I bought this thing at because I figured we were going to be at triangle support here. When we hit 2377, I bought it right here on this red candle. And it was at the end of the day, and it slipped a little bit in the Asian Open, and it popped back up to my break even. I think I basically flatted the trade. And then of course I missed this ramp up that we get yesterday, that started yesterday. But I was trying to play off this triangle support. I do think we're in this like big triangle type of formation, and if you're an emerging market currency bull and you're like, man, I think that the peso, this is a great value proposition and I want to be long pesos, I would just wait for 25, or whoops, I didn't mean to do that. And if you're like me and you think that the US dollar Mexican peso is heading to new highs, and it might even be just brief new highs, but I think we're making a run for 26 to 27, somewhere up here, then you got to play it off of the support. Obviously right now is not the time or the place to be playing the US dollar Mexican peso. You don't have any edge here, so it's not something I'm going to do now, but it's just something that I think we need to be aware of. Also, here's the US dollar Canadian. The US dollar Canadian, I was hoping was going to I had all sorts of bids down here yesterday at 137.50. I thought we were going to take out these lows. Just because I think something's going to happen doesn't obviously mean that it does happen. But I was hoping we would get down here so I could be long down here. And obviously none of my bids got filled. But what has happened is we're creating this like pretty key support. And I think that support's playable, meaning that I think we can trade off of it. Now with crude getting its Friday lift right now, it might cap the rally in the US dollar Canadian, but what I'd rather do is be long somewhere down here sometime next week. And I think that's how I want to play it. I don't necessarily want to short the US dollar Canadian, because if we do go into a risk off type of event, like let's say the S&P drops another 3, 4, 5% from here over the next couple of days, the US dollar Canadian could potentially break out, and I don't want to be short, so I'd rather be on the long side down here or closer to 139 if I can get it. So those are just some things that I'm thinking about. It's Friday. I'm up pretty good money overnight from my Aussie exposure, so I'm not. The worst thing for me to do, and this you guys probably feel exactly. You guys probably feel exactly the same way I do if you've been in this situation. If you're up on a Friday or you've had a good week, and I've had a great week actually, trading, the worst thing to do for me is to piss away profits on a Friday, because it leaves a very sour taste in my mouth over the weekend. And then I have a crappy weekend. I beat my wife, I slap around my kids, kick the dog, I have a bad weekend.
Shoot the cat.
Yeah, shoot the cat. I'm just, no, I just
Yeah,
I end up having
Blake.
a really piss poor weekend when I just I bleed away profits on Fridays. So
what's wrong with having a great week and and getting flat and just enjoying that you had a good week?
There's nothing wrong with it.
There is.
The only
you don't
thing
have an
is,
excuse to beat your wife.
yeah, right. There you go. The only thing is when opportunities present themselves, I do think that the euro is at levels that I want to be short. So, the fact is I've got a small position here. It's not aggressive. We're still making hourly higher highs, and higher lows. So I don't want to be super aggressive here. But I've got a starter position on the euro being short, and I'm going to try to hold it depending on how the day progresses. If by the end of the day we're trading above 110, I'm probably going to cut it loose and enjoy my weekend. But if we close a little lower and we close down closer to 109.50, I intend on keeping it going into next week. I do think that we need to sell into the strength. Like I said, there are certain currencies that I do want to play dollar strength against, and the euro is one of them. So but like I said, I'm very, very careful on Fridays, especially after coming off of a good week. And like that, there's nothing worse. I'm sitting here looking at my P&L right now at what I've done overnight. There's nothing worse than just going from this nice positive number to a flat or negative number. That's like one of the worst things in the world to me.
Yeah, the month has just begun. So yesterday you booked a good week, a good month, and yeah, here we go again.
Exactly. So
there's no residual income in trading. Have you noticed that?
What's that?
There's no residual income in trading. You have to keep doing it.
No,
like insurance salesmen have.
So yeah, in insurance sales, and what else would be residual? I don't know, but
network marketing, MLM, and things like
all that stuff. Something
having a book,
writing a book. There you
go. Having a book.
Oh, having a
of
book.
People trading.
So Steve Stelios, coach, great job this week. I hope everybody listening in right now had a great week as well. I hope you guys really enjoyed all the speakers. Ben. I always love hearing the guys that we've had on. The only person I've never heard was the Pivot King that you brought on. That was the first time I've actually heard him speak.
I got him going at the end.
With a question. I had to,
Did you see that?
Step away. I could actually hear out away from my office. I could hear the speakers and you guys going off. So, yeah.
I thought I was in a kind of like a Robert De Niro, Al Pacino movie for a little while.
He's like very East Coast.
The wise guys.
Very East Coast. So, hey, real quick, we had some questions about how do I get to the chat room when I'm in, Forex Analytics. It's this button right here, right next to your avatar. So you see your avatar. There's a little thing that says go to chat room. And once you do that, you get plugged into this page, which this is all of us here. You can see there's about 109 of us in there right now. So anyway, so yeah, that's it. Steve, how you feeling today?
I'm good. There I am. You can also see me without the background.
You got to be kind of tired.
Steve's starting to like the camera.
Yeah, you see.
Nice office, buddy.
Thank you. You can only see the corner, actually, as you understand. But yeah, thank you.
Nice.
So, Stelios, how are you doing?
I'm very well. Can I just say it was an amazing event, and obviously my man crush Peter Schiff was there. I was loving every second of him and everybody else, actually. So well done, guys, to everybody. And Dale, you were, well, I love you, so you were great.
Oh, thanks, Dale.
And for those that are asking, because we have questions about the recordings, we have a friend here that's asking, and yesterday people were asking, as you understand, we have several hours of footage. We don't want to upload it unedited. So during this weekend, we're going to be working on editing the footage, and it's going to be by the end of the weekend, it's going to be up. Don't worry, all of you that registered for it, you're going to receive an email when it's ready, so where you should go to watch it. Okay. So you're going to have it within the next couple of days at your disposal, and you will be able to see whichever of the presentations or interviews as many times as you like.
Fantastic, Steve. All right.
Great work, Steve.
Well, yeah, great work, team. And I'm going to let you guys get to the analysis. And I want to wish everybody a great, safe, happy weekend. Be safe out there. And I'll catch you guys on the week ahead video that'll come out this weekend. So if you guys aren't accustomed to watching that, make sure you watch it and share it with other traders. That always helps us out. I always try to urge you guys, hey, hit the thumbs up on the YouTube video when you see it, and share it too, because that helps us spread the good word. So thank you very much. And Steve Stelios, coach, hats off to you. Passing it to you.
Thank
Have
you,
a great
Blake.
weekend.
Thank you, Blake.
Thanks, guys. You too.
And without being able to officially announce it, there is a very, very good chance that we are going to have more events, and next one might actually be in September. So we're going to have more time to work on it. Hopefully, we're going to have even better lineup if that's possible. Of course, you're going to know in advance.
Did
So
you
still,
guys hear?
Yeah.
Did you guys hear before you get going? Did you guys hear when I suggested a theme song to Peter Schiff, and he said what? And I said Goldfinger. He loves
Yeah.
only gold, and he said, "No, I love more than gold." I go, "Okay, your family. You love your family too." And then he started talking about asset
Yeah.
management.
Which is true. I mean, a lot of people that haven't heard him misunderstand it, and they think that he's a one-way man.
Yeah.
But in essence, it's what he said, and it's not by accident. If you notice, he had something very much in common with Mark Yusko. Both of them, when confronted about, one of them about gold and the other one about Bitcoin, what did they say? They said the exact same thing. They said, in my opinion, I'm just saying that if you put a little bit of Bitcoin, said one of them, Mark, in a portfolio, you would have performed much better. Peter said, if you put a little bit of gold and gold stocks in a portfolio, you will have done a lot better.
Yeah.
Right?
Yeah.
Right.
That's one of the misunderstandings that they exist with these people. People think that they're all, 100% this asset or that asset, something like that. But anyway, they were both very, very interesting. And Mark Yusko, we had a drink with him, Steve, last summer. He's a really, really nice guy. Really nice guy.
I'm jealous.
He's really nice guy.
Yeah.
And easygoing and very sweet spoken, and he's what you see. Actually, he's very genuine. I mean, you know how it is, Dale. I mean, all these guys are very well off, right? It's very easy if you get there, to act like a diva. You know what I mean?
Yeah.
Yeah.
But
cool.
nothing like that.
Yeah.
All right. Okay. So quite day to day because it's a holiday. Actually, we were laughing on our Skype chat because Amanda said, "Oh, it's a holiday." Oh no, we're not in the EU anymore, the UK. So it's not a holiday in the UK. It's not a holiday in the US, but it is in most of Europe, and it's been pretty quiet today. We had a couple of economic indicators, some PMIs out of Australia and UK came in weak as expected, and this is most likely going to continue for the next few months or a couple of months at least. We have US manufacturing PMI coming in about an hour and a half. The interesting thing in terms of movement today, market movement, is that there are these commodity currencies like Aussie Kiwi, the Norwegian kroner, and CAD, and they used to move quite well correlated with oil. Now they've kind of turned into, like Blake very correctly said, they've turned into a risk-on, risk-off indicator. You see stocks going, S&P's down 2% on the futures, and the Aussie and the Kiwi and the krona are down. And
to be fair, the Aussie yen was always very nicely correlated with risk, always. I mean, traditionally, because Aussie, it has the yen component as well.
Yes. But I'm talking about Aussie dollar, Kiwi dollar, dollar krona. all that. And it's funny because oil is up quite a bit today. It continues.
Yeah, oil continues to do quite well, actually.
Yeah.
Let me pull up the continuous.
It's really interesting because you will see, and I've been trading for so many years, and you will see correlations that work and work for a long time. Then they stop working for some time, and then something else works. And so you have to be nimble all the time. And this is something I said on an event that I was invited by Boris Schlossberg actually about a month ago, where I spoke about being a market maker and then trading for myself. And I said, look, you have to be very adaptive to the environment. And I remember in 2008, I was only trading for like 5 or 6 years at the time, so I wasn't one of the big guns. But I saw some traders who had been there for like 20 years, really established traders. They blew up because they just couldn't adapt to this new environment, and it was amazing to see. So you have to be nimble. You have to be ready to change your mind. It's really important. I know it's a cliche and everybody says that, but you really have to.
Stelio, it's the most basic law of nature. Things either adapt or die.
Yeah. Yes. Adapt. Yes, that's it.
Yeah. So yeah, I mean, look at it as a natural phenomenon.
Yeah. So this is interesting with commodity currencies kind of following risk. Let's see how that goes. I still think we're going lower in equities. Do I think we might hit 3,000 the S&P first? Maybe, yeah, we could do. But I think for reasons related to the virus outbreak, I don't think we're going to see a V-shaped recovery, and that's why I think eventually we're going to see one more leg lower in equities before we start a big run to new all-time highs and beyond. And it's interesting because I was reading about a report from the University of Minnesota, which was warning that this pandemic could be around for a lot longer, a couple of years, I think they mentioned. And the danger with this particular virus is that apparently I'm not a virologist, obviously, but I'm just saying what I'm reading, and apparently the danger is that you are most infectious when you're still not showing any symptoms, and that's
which is quite tricky.
So that's why they think, and I think they're right, that it's going to be very difficult to contain this, until obviously there's a proper vaccine. And
so it's extremely important to either get an effective treatment that will reduce substantially the chances of side effects that eventually kill some people, or vaccination. Yeah,
absolutely. So that remains my view on the way this thing is going to go. And I think, I've read a lot of experts saying that, wait until September, October, and there's going to be probably a second wave. And, I hope there isn't, but,
there wasn't the case of the Spanish flu 100 years ago. Let's hope that's not going to be the case again. Although I'm afraid there is a substantial chance it's going to happen, as you said.
Yeah. So, I'm very cautious with equities. I think a lot of the shorts have been squeezed out, and if we get another push towards 3,000 or so, I think that then the FOMO crowd is going to get in, and then we'll be
aggressively
ready. Then we're going to be ready for the leg lower. So it just needs a lot of patience. I'm not long, and I'm not short either. I've put in my bids quite a bit below in some indices and some individual stocks, and I'm just waiting. So. So other than that, it's quite there, as you can see, and really just the US data in about an hour and 20 minutes, and we can all, I think, just relax for the weekend.
Okay.
Oh, there's a cat. I saw the cat.
Yeah, Harris is going back and forward. Yeah.
Nice. You can see a tail. Nice.
You know how it is. Cats feel everything is theirs.
Yeah, absolutely.
Okay, so great. Quite nice reversals that we got yesterday. Here's the S&P 4-hour chart. Broke through this channel. You can see it in purple. Never managed to break back above it. Crafted, in essence, a new ascending wedge there. Broke down below it. My coast average is at 29.02 or 3. So now I'm in the money. I've already placed a stop loss above the highs. Actually, not exactly above the highs. It's at 29.80 to begin with. So now I'm going to write this out. At the same time, and if you remember, we kept saying that, we're getting confirmation. That was a 4-hour chart, by the way. We're getting confirmation from important FX pairs. Look at those again. Beautiful, beautiful ascending wedge. I mean, textbook. Yesterday, despite indices turning lower, we got like a pin bar, which is an indecision bar. But look at the continuation we're seeing today. I mean, quite a nice. Let's have a look at it on the 4-hour chart. So here it is on the 4-hour chart. I was focusing more on the 4-hour chart, drawing, the flags, etc. And now it's failing. The trend line you should be looking for is this one, right? We've already broken through it. So if you want to see the wedge on the 4-hour chart, here it is. It's this one, breaking below it very nicely. We know that Aussie yen is traditionally very nicely correlated with risk. Also, yesterday I mentioned it twice during the event. One at the beginning when we had the face segment, and then again when I had to take over for a few minutes when we had some issues with Peter Goodburn. I mentioned about Euro-Aussie, and we had also mentioned it here the previous days. I said that, listen, you can't count on the yen anymore so much of being correlated with risk, because recently it hasn't been working well. But what you can count on is Euro-Aussie. And Euro-Aussie is going to give us a very good signal about what's happening with risk. So look at yesterday's huge outside reversal candlestick. I mean, if I zoom in, you can see how huge that was. I mean, that had the range of like 3 candlesticks roughly. Look at the continuation today. And I remember explicitly saying that be careful, because once this reverses, you can easily see, even if we get a corrective rebound, you can easily see a 500 pip move higher. As it seems I was wrong, because it took us only 1.5 days to get those 500 pips. So probably this move higher is going to be a lot more than 500 pips. It might end up easily being 1,000 pips. So, look at it. Already 500 pips off yesterday's lows, and that's with 550 pips off yesterday's lows. That's within 1.5 days of trading, right? Now, we've cleared this channel. We're approaching a first area of resistance roughly at 171. I don't think we're going to stop there. We might stall temporarily, but I don't think we're going to stop there. I see no reason. Here's the second cut, by the way. This is a leaky. Previous one was Harris. I think we're going to be all the way to 174 at the very least. So, yeah, that's it. Euro Aussie broken out, and that's it. Euro Kiwi breaking out today. It lagged a little bit, but breaking out today. So look at it. A lot more space to the upside. 102.90. We've also placed an alert here. Is probably the next area of resistance. Let's have a look at the equivalent pound pairs. So pound Aussie, pound Kiwi. There they go. Pound Aussie. Very beautiful reversal. About to retest key area of resistance. We might stall temporarily here, 195, but I do think it's not done. So we might see something like this. Even if that's a bearish rebound, I would still expect at least one more leg higher. Okay. And pound Kiwi anyhow was the one holding up best, because ascending, long-term ascending channel still holding, shorter term ascending channel was still holding, and I was saying a few days ago that at the very least we might see another attack of the long-term channel. So why not? I mean, nice rebound so far. So, we were focusing on those pairs even before we got the reversal. And as you see, they're indeed proving that they were the best places to bet that you would see a reversal once risk soured. And it did. Now, will we see follow through? I think there is a very good chance that we will for at least a few days, might even be a few weeks. Even if we've seen the lows in indices, we ran too fast, too far away. We are uncertain about valuations, but you can have a very high confidence that they are at all-time highs, because we know that earning estimates have been depreciating very fast, and perhaps they will continue doing so. So with price having reached levels like, levels that we had seen for the first time just like 4 months ago, and valuation and earning expectations plunging, you can understand that the PE ratios are likely already to the stratosphere. So just considering that, there is a lot of potential for downside, no matter what the Fed does. I'm not saying that what the Fed does doesn't have an effect in the market. It obviously does, because if they hadn't been doing all they had been doing, I think indices would already be a lot lower than the low we recently saw. So a lot lower than roughly 2,200 that we had in the S&P, a lot lower in the case of the Nasdaq than 6,500 that we almost reached, etc. Especially the Nasdaq. I mean, Nasdaq, in the pace it was accelerating higher, it was literally like a week away from all-time highs, which is, it's extremely ridiculous. Having said that, the Nasdaq is the only one that's still holding this formation. You can see this channel. I think it's also going to break through it, and I think that it also has a decent downside potential. I think that for the Nasdaq, 78.90 is going to be a key area of support. Yes, there's a good point. Susan says, Susan says she enjoyed the trading summit. I'm happy to hear that. We've had a lot of positive comments, and trust me, we're very happy about it, because at the end of the day, we do this for various reasons. We obviously want to increase, following to Forex Analytics and our product. But, we said it since the beginning. I know that a lot of people say it, but not many people mean it. The first conversation I ever had. Yeah, the first conversation I ever had with Blake about building this company is Blake telling me, listen, I've been working with this crowd for many years, and my first focus is to help people do better than they would do otherwise. And he meant it. So trust me, we're very happy, to provide a lot of free content. I mean, we provide a lot more free content. I mean, we had a lot of people tell us, Face is a nice product. Why don't you monetize it? Why don't you put like a small fee to it or whatever? But we genuinely want to offer. We know that some people can't afford anything, can't afford, I mean, a subscription or whatever. Some people just enjoy hearing about trading. They don't even have a trading account. They hope they're going to have in the future or whatever. Now, the question was, Baroque said about NQ gap above. Yeah, I mean, every gap will eventually probably be going to be filled, or most of them will. Doesn't mean that we have to do it now. There's a very good chance that we're going to see much higher prices in indices, and both Stelios and I, that are very bearish about the economic environment, believe so, for the wrong reasons, of course. We believe that we're going to see a huge appreciation in indices because of inflation, asset price inflation, and probably eventually dollar and in general fiat currency devaluation. So yeah, I believe that gap is going to be filled. That doesn't mean it has to be done now, right? It can be done after we see a very decent pullback, and that's, I think, my main case, and it will remain. Now, questions we had about Aussie, Kiwi, USD CAD. So listen, we said that the Aussie would eventually fail. Worst case scenario, I thought we might make it to 66.70. We didn't make it there. I said, I think like 3-4 days ago, something like that. I said that, for me, it's not if and when they're going to fail. It's about what kind of a move we're going to see once they do. Because the type of the move we're going to see now, and actually I remember I drew on a 4-hour chart on the Aussie USD. Yeah, here it is. It's still here. So we were obviously back here, 28th of April, that is then, okay? So I said that, listen, Aussie is going to fail somewhere there. Actually, we got it right. So it's going to fail somewhere there. So for me, it's all about what kind of failure are we going to have? A failure that's going to produce an impulsive move lower, or a failure that might produce a corrective move lower. In one case, I'm going to be very interested in buying. In the other case, I don't know if I'm going to be interested in selling, because I know that these pairs are already extremely oversold in the long term. I would rather participate in that sell-off through, other markets, right? Probably the stock market. So, here it is. We have the beginning of it. Let's see what type of a move we get. I do think so. I do think, though, that it's going to last for at least several days. Okay, so I wouldn't be that fast in trying to buy it immediately. I think we're headed lower first. Same thing with Kiwi, so no need to go over it separately. Now, having to do with USD CAD specifically, let me pull it up. First of all, if you remember, I keep repeating in USD CAD again and again and again. What I've been saying is above 138, look higher. So we retested 138.50. There is a chance that we even created a double bottom here. When are we going to know that this was a double bottom? Answer: if we see levels above 142.60. You can see that area there. Above 142.60, let me mark it with a different color. Above 142.60, besides having already triggered, before we get there, this pennant, quite a big one, above 142.60, we trigger this double bottom, which has an implied target, coincidentally or not, up there. So a retest of the 146.70 area. Okay. So, USD CAD, that I'm long-term bearish the dollar. There's no question about it. But USD CAD is one of the pairs that I'm the least bearish. And in any case, I've told you that I'm not bearish the dollar yet, so not in the short-term horizon. So I still see what likely looks like a corrective formation. Now, can this prove to be something different? Can this prove to have been the high already? Yes, it can. How will we know? I will know if I see a breakthrough this 138.50 and an acceleration lower. So it's not only breaking the level, because we might break the level in this type of a manner. We find resistance up there. We start moving lower. We break through 138.50, but the market keeps depreciating in a very conservative way. In that case, I'll be like, yeah, okay, sure. Another bull trap here, a lower low. This pennant might be in play, so we might head lower towards 137.50 or so, and then move higher once again. But if we break through 138.50 and then we accelerate lower, then I'm going to start seriously thinking that perhaps this was a first move lower, a consolidation, and then perhaps a wave 3 starting to the downside, right? So it's all about not only price, but
how it
price
gets
action.
there.
Yeah, price action as well. What type of price action do you see? The reason I'm a little bit more skeptical and I'm saying that we might have found a high, not my main case scenario yet, but we might, are pairs like this one, the USD NOK. Because look at the USD NOK, how much different it looks from the USD CAD. First of all, the type of the move higher was explosive and easily could be said exhaustive, right? Second of all, look at the type of the rebound we've had here. So far, it looks a lot more corrective to me. Somebody could even make the argument here that perhaps the type of formation that we have in hand here is this one. So what do you see here? Right?
A weak wave 2 bounce.
Yeah. Or this might be a B, but in any case, you might have 5 waves down for a C.
Yeah.
Right. In any case, easily we can see levels like 948 being retested here. So, you know, I remain somewhat skeptical. Here's USD SEK as well. Same type of price action. So, you know, I think the next few days to few weeks are going to be very, very important for us to decipher what kind of a low did we find in the indices. Was it a short-term low? Was it a longer-term low? What kind of a price action should we expect going forward from the dollar? Because keep in mind that the dollar, look at this chart. This chart is a mess. I mean, strong move lower, stronger move higher, rather strong move lower, and now coiling. So, you know, good luck trying to trade the DXY here, right? It's a nightmare. It's, you know, it's a chop fest. So, you know, give it a little bit more time. Hi, Steve. Could you have a look at the GDX? Yeah, we talked about the GDX several times during the past few days. Guys, listen, the GDX has genuinely produced a long-term breakout. Look at this. Now, this whole type of price action could be interpreted as a big
saucer bottom,
rounded bottom. What makes it even more interesting in my eyes, if that's the case, is the fact that before it broke higher, it first really, without a serious reason, took out everybody that was long, took them to the cleaners. I mean, a lot of people probably surrendered here, right? I mean, think about
Kirk Spano, he bought it there.
Yeah, a lot of people were looking at this. Look at how devious that was. Let's focus on this part. Now I'm gonna temporarily draw on this chart. I'm gonna annotate. So let me take the drawing.
Mr. Market's such a mean guy.
Yeah, look at this. Look at this. Yeah. A lot of people are starting to get convinced that, oh shit, with all that's happening, gold is gonna fly to the moon, and gold stocks, since they're like a high beta proxy, they're gonna fly even higher. And then they look at the chart, and what do they see here? They see a cup and handle formation, right? So then we reach that level and they're like, oh my God, this thing is breaking and it's going to fulfill the target of this cup and handle formation, which is like from like 17 to 31, 32, extended to the upside. Oh my God, a huge move coming. And then the market takes all those people down to 16, lower low than the low they had in this formation. I mean, even the most conservative of those have had placed their stop loss below that low.
How about this, Steve?
Everybody
Here's another
goes,
devious thing. We negate the breakout that we just had and pull back to correct.
Absolutely.
Okay, so now it's going to shake out late longs, pull back 5 to 8 points. And
yeah, imagine if it does that. I was about to say that. Imagine now if it does that again, meaning kicked out everybody that was long there, made them think that, you know, they were falsely pulled into this trade. Now it breaks up to the upside. Some of them desperately try to jump back on the wagon. Imagine breaking down below the breakout area once again. and then
Yeah,
exploding higher.
that's what I think.
I mean, good luck following this type of price action, right?
Yeah.
But it can happen.
Yep.
In any case, looking long term and recognizing that, you know, this is a very tricky market, you've seen it. I don't think there is any other way for gold and silver but higher. I mean, realistically speaking, there isn't any. Now, will they move in a straight line? Absolutely not. Nothing moves in a straight line, right? And there is definitely, you know, a big portion of weak hands that have jumped in the market late. So, you know, I'm skeptical about the price action here in gold and silver in the short term, right? I'm really skeptical. But you know, I have my physical gold, and I intend to keep it. If all goes well, I intend to pass it on to my son, probably at totally different levels. I'll find any opportunity of any big sell-off to buy both in the financial markets, but also get some physical silver as well.
Where will
You know,
gold be in 60 years near the end of your journey? Before you hand it over to Jason.
It's going to be a lot more than 6 years to hand it off to Jason. I can tell you that much.
60, I said.
60. 60 years, I'm going to be past my expiration date.
Yeah.
In 60 years, I'm going to be exactly 100. In June, I'm going to be 40.
So when you your 100th birthday, you may want to give it to Jason earlier, so you could see his face when gold is either 25,000 an ounce or $50.
$50, forget about it. Forget about it. If you think there is any other way out from what they're doing than inflating, at least partially, yeah, we'll see. In any case, I'm not worried about it.
All right.
Gold and silver have been there for 5,000 years, and something tells me that the chances that their usefulness will expire during our lifespan is near zero. So I'll take my chances.
Okay.
Gold can be manufactured in a lab now. Sure, fine. If they could, if they could cheaply manufacture gold in a lab right now, I'm pretty sure that we would already know. Right? Exactly. Albeit expensive. So yeah, they might be able to manufacture it, but you know, it is what it is. Plus, somebody can say that yes, but when the price of gold goes up, the manufacturing cost of gold might then make sense. Answer: how do you know that inflation won't have made whatever you need to manufacture it a lot more expensive as well? Probably it will. So, you know, inflation, don't forget that I'm not advocating that gold is a means to make you rich. But what I'm telling you very clearly is that gold is the best method of preserving your purchasing power over the years, right? So at least we know that as long as every fiat currency is depreciating concurrently, I mean, go back, you know, Google like advertisements from 40 years ago and look at prices. It's a joke, right? In all those years, look at the huge depreciation of all fiat currencies. Huge. Now, gold is going to buy you more or less what it could buy you back then today. So it's what I said. You preserve your purchasing power. That's what you do. It's not going to make you rich in real terms, but it's going to help you from becoming poor in real terms. That's it. That's all of it.
Great point.
Okay, let me see if we have any more questions. I'm assuming there's no interview today. We had quite a few of them during the past 2 days, right?
Assumption. Yes,
yeah,
correct assumption.
Okay.
Yeah.
So one of them is Euro Yen, and I'm going to address it because Euro Yen also found a significant low yesterday. If you remember, and those of you that are Forex Analytics members, I remember specifically writing that twice at the end of week analysis, both last Saturday and the Saturday before that. And I said it on the webinar as well. I said, listen, there's no question that the trend is lower, but this 116 area is a very strong area of support. It's a huge mistake trying to be short while we're testing and retesting and retesting this area, and we keep failing to break below it. And look at the explosive move we had yesterday, right? We went from like 115.60 at the lows of the day up to 117.80 within a single day. So that's a squeeze. So bottom line, I said that if you want to keep looking lower for euro yen, which makes sense, you should at least look for better levels. And what is a better level? It's like a rebound towards 118.80, 119, 119.80. You see this descending channel. So we might be on our way there. Okay, so be careful. I mean, that's not the place to short it immediately, especially after a day like the one we had yesterday. Okay, how strong is Euro USD resistance area we're at now? It's decently strong, but I can't stress it enough. I mean, it's easy for me to keep analyzing things like Euro USD because you want to look at them, right? But really, disengage from pairs that are doing nothing like Euro USD. Find other things to trade. I mean, we found support again there. We might find again resistance there. Who cares? Look at Euro USD. Is this the place you want to put your money in? I mean, I think that even the best pros, unless you are a scalper, a very, very short-term trader, in which case you can find trends on 1 minute or 5 minute charts every single day, no matter what's happening. I mean, if you put even the best traders to try to trade this thing, they're probably going to lose money. So find other things to trade. You like the euro, trade it against the Aussie. I mean, you had an excellent opportunity yesterday. It's breaking out. Trade it. Forget about the Euro USD. I mean, the thing it does best is losing money to traders that try to trade it. USD Mexican better? Not really. I mean, better in general versus the Euro USD. Absolutely, no question about it. But look at this. It's still coiling here, right? Look at this. I think this might end up with what I drew a long time ago, a breakout to new highs, and then a failure. That would go very well with a big move for risk off. And by big, I mean a strong one. Might last just a few days, might not take us to lower lows, but should be enough to push USD MXN to new highs, perhaps. Right? And then a complete reversal and an overperformance of the Mexican peso. Same deal with many of the exotic currencies, right? Look at the USD TRY here. Flirting with new all-time highs. USD RAB, the same. USD ZAR. Do you see this formation being very similar to the USD MXN? So for me, this is also probably a pair that's going to produce this type of a move here.
Maybe that's a wave 4 triangle with a terminal thrust to end it all.
Yeah, something like that.
You know, develops
so yeah,
into that. Looks like one more rally in the dollar with a lot of these exotics.
Might be the case.
And then that's it. Yeah. Okay. Great review as usual. Even after a burnout week, you're
Geoff, Steve, gentle reminder. Yesterday you handed the mic back to
Blake.
European countries. Fiscal unity for the euro to gap up substantially. Guys, no chance. No, I'm Greek, right? I'm Greek. Is it in my best interest to have Germany say, yeah, sure, give me the debts of the whole Eurozone and I'm going to guarantee them, along with 2-3 more countries? Yeah, absolutely. I mean, theoretically speaking, it's in my best interest. It's not. Because a lot of people do the mistake that they're looking at the tree and they're missing the forest behind it. So in my opinion, it's in nobody's best interest to keep expanding this huge Ponzi scheme of moral hazard. So in my opinion, the best thing that can happen to everybody on the planet is everybody taking responsibility for what they do, becoming fiscally responsible again, and building economies properly again. Last year, the US economy, directly or indirectly, grew 90% based on consumption. Can you understand that? That's sickening. You can't have an economy that only consumes. Strength, and the US used to know that, comes from producing. Right? I mean, there is a limited amount of time that you can persuade the planet to sell you the goods that they produce by using LLC. You know, easy acronym to remember it by, like the company, limited liability company, labor, land, capital, the three main factors of production. So for how long will you be able to persuade people, countries, civilizations to use tangible assets, factors of production, to manufacture things and sell them to you, to us, all the countries of the developed world, right? In exchange for useless pieces of paper that, you know, are promises to pay in the future. I mean, this is absolutely unmanageable, and it's going to fail miserably in the future, very miserably. And we're going to end up being under the boot of countries that don't even respect democracy, like China, for example, because we will have done all the wrong things for many, many, many years, and we will have given them the ability to control our way of life. Okay, and that's going to haunt our children and, you know, our children's children, etc.
Yeah.
Anyhow.
Okay, well, thanks for cheering us up.
Yeah, it's a big conversation, and
yeah,
I'm gonna on Monday I'm gonna revisit the conversation we left off with Blake. Why it is unattainable to have a debt jubilee happening between countries, and why even if it happened, it wouldn't help in anything. And just to answer that last part very briefly, it's like the example, let's say that you have a huge hemorrhage, okay? Let's say that you have a huge hemorrhage and you're losing a lot of blood. Is it a solution to give yourself a bottle of blood? Yeah, it's going to help you survive a little bit longer. But if you don't fix the hemorrhage that is killing you, you're just buying yourself a little bit of time. So having a debt jubilee without fixing the hemorrhage is no solution whatsoever. Okay. Anyhow, everybody have a lovely weekend.
Yes, and
we'll see you back on Monday.
I don't know how your sphincter is, but mine tightened up a little bit during that.
You know
that last metaphor. Anyway,
I'm not a pessimist. I'm really not. As a human being, I'm not a pessimist. I'm a realist, unfortunately.
I was talking about hemorrhoids.
Oh no, I don't want to go into that. Thank you.
That's what you were talking about, isn't it? That if you had
hemorrhage.
Yeah.
Hemorrhage. Yeah.
That's why I said, you know, it made my made me clench.
Okay, time to wrap it up, coach.
Anyway, Preparation H weekend for everyone. And really, thank you everyone for hanging out with us this week. Don't just count your pips, count your blessings. And we're going to kill it again next week. Have a great weekend, everybody. Have a great weekend, Steve.
Bye-bye, coach. Bye-bye, everybody.
Take it easy.